We often hear about charts and patterns in today's markets, but what are they referring to? Watch this video until the end if you want to get a better understanding of what technical analysis is. Technical analysis is a trading strategy used to identify trading opportunities by analyzing statistical trends from trading activity. So, what does this mean? Well, unlike fundamental analysis, which we covered in the last few videos talking about value investing, I recommend watching them, obviously. Technical analysis focuses on the study of price movement and volume. People using technical analysis believe that volume and price changes can be valuable indicators of future price movements. Technical analysis is trying to forecast the price movement of virtually any tradable instruments that is generally subject to force of supply and demand. Like we talked in the last few videos, fundamental analysis involves analyzing companies' financial statement to determine the fair value of a stock. With the technical analysis, we assume that all the available information is already priced in, and we, like we said earlier, focus on the statistical analysis of price movements. By looking at the price movement, we try to understand why it moves the way it does and what is the reason behind it. Another way of saying it would be that we're trying to find a sentiment behind the price trends. But how do we do that exactly? Well, by looking for patterns and trends. Like we say in one of my last videos, History of Technical Analysis, Charles Dow released a series of editorials discussing technical analysis theory. His writing included two basis assumptions that have continued to form the framework for technical analysis trading. First, the prices of stocks reflect all available information, which is known as the efficient market hypothesis. According to this assumption, stocks always trade at their fair value on exchanges, making it impossible for investors to purchase undervalued stocks or sell stocks for inflated price. The only way an investor can earn a higher return is by making riskier investments, as it should be impossible to outperform the market as a whole through expert stock selection or market timing. As we saw in the last few videos about value investing and Warren Buffett, this might not always be totally right. Second, even random market price movements appear to move in identifiable patterns and trends that trends to repeat over time. Professional analysts still build on Dow's works. These days, they typically accept these three general assumptions. First, the market discounts everything. The fundamentals of a company, general market factors, and market psychology, according to technical analysts, are all already factored into the stock price. The efficient market hypothesis, which draws a similar conclusion about prices, is consistent with this point of view. The only thing left is to analyze price changes, which technical analysis believes to be the outcome of market supplies and demand for a specific stock. Second, price moves and trends. Technical analysts expect that prices, even in random market movements, will show trends regardless of the time frame being observed. In other words, a stock price is more likely to continue a past trends than move erratically. Most technical trading strategies are based on this assumption. Third, history tends to repeat itself. Market psychology, which has a tendency to be extremely predictable based on emotion like fear or excitement, is frequently blamed for the repetitive nature of price movements. In order to analyze these feelings and subsequent market movements and understand trends, technical analysis uses chart patterns. Although many technical analysis techniques have been around for more than a century, they are still regarded as useful because they show patterns and price movements that frequently happens. I'm keeping this video short because I want it to be clear. These are the OG's assumptions and where we are in today's markets. We're going to keep talking about technical analysis in the next two videos, so don't forget to like, comment, and subscribe if you want to be a better investor in the futures and make more money. Have a good one, everybody.